What's going on, guys? Welcome back to the channel. In this video here, we're going to be doing a comprehensive analysis, stock analysis on Muln Automotive Incorporated. Now, I haven't really heard of this company, but I'm assuming they're an EV vehicle, and they've covered a bunch of EV vehicles in the past, from Neo to Rivian to Tesla. So this will be somewhat of an interesting video. I'm going to jump into the stock research tool here and pull this up. We're going to look at the company financials, the fundamentals, and finally we will do a price analysis to determine a fair price to pay for this business. And I'm loving that I'm not getting certain values anywhere. This should be fun. All right. Sitting at a whopping $1.32 a share. This is it's an auto manufacturer. Started in, let's see, information here. Muln Automotive, an electric vehicle company, manufactures and distributes electric vehicles. It also operates CarHub, a digital platform. Okay, I've heard of CarHub. That's interesting. Digital platform that leverages AI to offer an interactive solution for buying, selling, and owning a car, and provides battery technology and emergency point-of-care solutions. The company was founded in 2014 and it is based in Brea, California. Wow, okay. So another California car company. Let's see what this company is all about. I've heard some whispers and rumors about this business. We're ranking this at a 4 out of 10, folks, on the financial evaluation segment. So let's go through what this company is all about. 5-year PE ratio. Wow, it's been on a steady decline from $12 a share, spiking at 14, and now we're at what? Oof, okay. So no PE ratio here, folks. It's a fairly new company, I'm assuming. Let's go to the max years that we can pull up on this business, and that would be, oh my god, what am I looking at? 2012, and then, oh god, reverse split. Jesus, guys, what am I okay, listen, we're gonna try to be as rational as possible here. No PE ratio, so I'm assuming that this company doesn't make that much money, and they are probably in the negatives, considering our revenue trailing 12 months is currently $0. Not looking too good, folks. 0 there. Current ratio sitting at 0.49. Now we want this to be over 1.5. We don't have that. Now that would indicate to us, if they had that number, that they have enough assets on hand to cover their liabilities. It is at 0.49, folks, so they can't cover any of their debts or liabilities, folks. But they don't have enough. Now, return on equity average, that's pretty high. We're sitting at 87%. We want this to be 15% or higher. That's great. Now they're going to get a point. EPS growth, not enough data. What in the world? Negative 164 to negative 2000. What is this company, guys? What am I looking at? Listen, you know what? I'm just taking requests from now on. You guys tell me what companies to look at. I just found this up. I just heard this in my ear, and now I'm looking at this business. I've never heard of this company before. Leave a comment down below of a company you would like to see evaluated, and I will get to it. Return on equity, okay, we covered that. EPS growth, not available. Debt to equity, negative? What? Okay, that's phenomenal, but I've never seen a negative number. That means they're growing the business so well through equity and not through debt. We want this to be underneath 50%. This negative number, if that's what they're reporting, it's very interesting. I don't know what would cause that number to be like that. However, folks, it gets messy. It gets more messy than what I've currently seen over here in the first 5 categories. I'm not too impressed. Moving on to share dilution, 1100% increase in shares. Oh my god. Guys, they're diluting you beyond belief. Jesus. This is terrible. We want this number to be decreasing, or at the very least, staying the same. Guys, 1100% increase in shares? What? There's God, it's absolutely horrendous. Look at this. Well, I mean, it explains this huge jump here. Look at that. They're just supplying you with shares and just skyrocketed. And look at that. If you got it at the top, wow, you got lost like 2/3 of your investment. Terrible, absolutely horrendous. And now someone's holding. Jesus, that's absolutely horrendous, guys. 5-year net income growth sitting at not don't even have growth, not enough data. 5-year free cash flow growth, okay, that's something. We're in the company metrics, we are in the negatives. We're above our negative number, but still in the negatives nonetheless. 5-year return on invested capital, phenomenal number. We're at 46%. That's great. These are astronomical numbers of 1,600%. What am I looking at? What am I looking at? Revenue growth, no revenue growth, 0. What is this company, guys? What am I looking at? 10 years this thing has been on the market. It doesn't turn a profit. It hasn't. No revenue. What? No, come on. There's no way. It hasn't made any money? How do they pay their employees? Net income. What? Guys, how do they pay people? Why are they only reporting for 2020? Like, is this 2019, 2020, 2020? Like, what? 2021? But they're showing that it's been on the markets from. I mean, this is probably before they went public. When did they go public? That's what I want to know. That's the real question. Because listen, my story could be completely wrong. Like, this is probably just a very, very new company, and the data is going back to when they pretty much emerged as a company in a new business. But my God, guys, I hope no one's invested in this business so far. I hope not. I mean, someone did. Someone messed up really bad here. But no revenue growth, questionable return on invested capital growth, or average rather, 5-year free cash flow growth. This is horrendous. I would say, guys, let's do a price analysis on this company. But how? Tell me how. Tell me how. Listen, you've watched my videos. You know what I like to see. I like to see some positive numbers. Hell, I would even take a negative number. I would just take any kind of number in these boxes, but I'm not even getting anything. I'm not getting anything. I got 0 across the board. Dashes. We got a price to free cash flow of negative 0.51. No PE ratio. There's nothing to work at with this company. Now, listen. Guys, you can watch a bunch of pump and dump YouTube channels that are going to probably tell you, guys, this is the next big EV company. They're going to do this and they're going to do that. And they're going to have this car and that car. Let me tell you one thing, folks. And something that we don't do on this channel is we don't spread any BS. What we like to see here, folks, on this channel, what we're trying to look for are companies that have a proven track record of actually doing something. You understand? We like to look at companies that have some history, some numbers. Now, if they're brand new, that's fine. They can get on their way. But I can't justify personally investing into a new business that haven't proven themselves. That's like it's like people that buy a vehicle, like the first generation of a vehicle that's been on the market. You know, the first year is always going to be rough. It's a brand new vehicle. There's going to be, you know what? Let's use this analogy. I'll tell you right now. Look, you're going to buy a car, right? You think of a reliable car. What's a reliable car? Most likely, some of you have probably are watching this. You probably thought of a Toyota Corolla or a Honda Civic. Why? Well, the Honda Civic's been on the market for over 50 years. It's proven itself as a reliable vehicle. It keeps getting better year over year. But the initial stages of the vehicle had to be proven first. It had to earn that reputation. Same thing with your investments, folks. Companies have to prove themselves to say, look, we've done this amount in revenue, done this amount in profit, and this amount in free cash flow, and we're looking to predict based off these numerics that we can probably grow at, let's say, X percentage a year. This is a company that is incredibly new, and we have no idea. It's an infant. You have no idea if a baby's going to be the next brilliant mind, Stephen Hawking, or some other brilliant figure. You don't know until they go out and start doing the things that would essentially put them in that trajectory course. This is a company that I can't. This is the first one I'm going to mark it down today that I can't do a price analysis on this business. What is my analysis of this company utilizing my software? Nothing. There's nothing to look at. There's nothing to look at. If you're going into this company hoping for long term, you are overpaying. I can tell you right now, you're overpaying for God knows what. They're diluting you to hell and back. Look at this. You're paying for this overpriced nonsense. A chart, it looks like this. Like, this is a red flag. And look how many red flags we got here. Share dilution. If that isn't the biggest kicker, I don't know what is. So listen, folks. Muln Automotive. Staying away from that. Brand new company. It's got to prove itself. But here's the problem I have with a lot of the other EV companies that are on the market. I think, and the same thing that happened with the marijuana companies a few years ago. In Canada, we legalized marijuana back in 2018. And all these marijuana companies came and went like that. Flash in the pan. Now, am I saying that Muln is going to be this flash in the pan automotive company? No idea. However, way back when automotives and cars were becoming a thing, a lot of companies went under. Few of them remained. And listen, 2008 recession, take a look at this. You had GM and Chrysler both going bankrupt. GM had to cut a bunch of their lines to keep afloat, essentially. They got rid of Pontiac, crying face. They got rid of, God, what was that other one? Saturn. And a few more. Oldsmobile got axed. There's a lot of things that got axed in the. I mean, Oldsmobile was probably earlier. But listen, car brands don't last, even in reputable brands like those. Now, they are a new company, straight out of California, Silicon Valley, trying to compete in a growing, emerging market with the likes of Tesla, with the likes of GM that has their new platform, and with the likes of Ford that has also gone full-scale EV. Is this a company that can do that? No idea, because it's brand new. Do your own due diligence, folks. Look at the long-term horizon and think. If not this company, why should I get their competitor? Is this the best bang for your buck? Or are you buying it simply because it's cheap and you hope that the stock price will go up because, oh, it's $1.32 a share. What do I have to lose? Well, you lose a lot. As you can clearly see by this lovely chart here, someone had the same process as you and lost everything. Don't be that person, folks. You want to make educated decisions. You are an intelligent investor. And if you're not an intelligent investor, there's the book link down below in the description box. Pick it up. It's on Amazon. Phenomenal book. But with that being said, folks, in regards to this company, I can't do a price analysis on this business. There's nothing to work on. But you know what, folks? Because I want to give you the best content available, let's just have some fun. We're going to have some fun. We're going to do a price analysis on this business. And let's say it grows 5, 10, 20, and 12%. We're going to do a profit margin of 5, 6, 7. We're going to do a free cash flow of 10, 12, and 14%. Because why not? Price of free cash flow, 14, 16, 18. PE ratio, let's go 16, 18, and 20 on the highest. A desired return of 13% return. And what do we get? 0. 0. Not making this up. 0. So Muln Automotive, it's been real, it's been fun, but I'm staying away from this one, and potentially you should too. But ultimately, do your own due diligence. If you believe this is a company you believe in long term, and you think it's going to be run into the skies and not into the ground, go for it. I'm not going to stop you. I'm not your dad. I mean, depends on who you ask, but I can't recommend this one. Anyways, folks, that's the video. Let me know what you think. Drop a comment down below, and if you haven't done so already, hit the like button, hit the subscribe button for more content like this. More analysis videos coming out on the way, Monday, Wednesday, and Friday. I'll see you in the next one. Thank you so much for watching.